Renewed hope. U.S. China trade talks spark market optimism. Global markets are showing signs of optimism as the United States and China prepare to resume trade talks. After months of escalating tensions, the two economic giants are sending delegations to Geneva in hopes of de-escalating the trade war. This news has injected a sense of cautious optimism into the markets, with investors hoping for a breakthrough. The resumption of talks signals a willingness from both sides to engage in dialogue and find common ground. The previous rounds of negotiations ended without a concrete agreement, leaving businesses and investors uncertain about the future. The upcoming talks represent a renewed opportunity to address the trade imbalances and find a mutually beneficial solution. A trade deal between the world's two largest economies would have far-reaching implications, boosting global trade and reducing uncertainty. The trade war has already disrupted supply chains, increased costs for businesses and consumers, and dampened global growth. While the market's optimism is understandable, it's essential to remain cautious until concrete progress is made. Global markets react to trade talk developments. Global stock markets have reacted positively to the news of renewed trade talks between the United States and China. The Dow Jones Industrial Average rose by 0.5% in futures trading. Similarly, the S&P 500 index gained 0.4%. The technology-heavy Nasdaq Composite Index also experienced an upward trend, reflecting investors' optimism about the potential for a trade deal to benefit the tech sector. The positive sentiment extended beyond U.S. markets, with Asian-Pacific markets also showing signs of encouragement. Hong Kong's Hang Seng Index climbed by 0.5%, while mainland China's CSI 300 Index rose by 0.61%. South Korea's Kospi Index gained 0.55%, and Australia's S&P/ASX 200 Index edged up by 0.33%. These gains suggest that investors across the Asia-Pacific region are hopeful that a trade deal could boost global economic growth. However, not all markets mirrored the optimistic sentiment. Japan's Nikkei 225 index experienced a slight decline, and South Korea's tech-heavy Kosdaq index also dipped. The outcome of the negotiations remains uncertain, and the markets are likely to remain volatile until a concrete agreement is reached. The negotiators' key players in the U.S. China trade talks. The upcoming trade talks in Geneva will bring together high-level delegations from both the United States and China. The U.S. delegation will be led by Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer. These seasoned negotiators bring a wealth of experience to the table, having navigated complex trade negotiations in the past. On the Chinese side, Vice Premier He Lifeng will lead the delegation. As a key figure in China's economic policy-making, Vice Premier He Lifeng is a highly influential figure in the Chinese government. The Chinese delegation is expected to include experienced trade negotiators and economic experts. The composition of both delegations reflects the high stakes involved in the trade talks. The talks are expected to be challenging, with both sides having to navigate complex issues and make concessions to reach a mutually acceptable agreement. The negotiators' experience, expertise, and willingness to compromise will be essential in determining whether the talks can pave the way for a more stable and predictable trade relationship between the United States and China. Section 4. Tariffs and their economic impact, a balancing act. The ongoing trade war between the United States and China has resulted in the imposition of significant tariffs on goods traded between the two countries. The United States currently has tariffs in place on approximately $370 billion worth of Chinese goods, affecting a wide range of products from electronics to machinery. These tariffs have increased the cost of Chinese products for American businesses and consumers. China, in retaliation, has imposed tariffs on approximately $110 billion worth of U.S. goods, including agricultural products, automobiles, and chemicals. These retaliatory tariffs have had a significant impact on American exporters, particularly in the agricultural sector. The tariffs have disrupted supply chains, increased costs for businesses, and created uncertainty in the global economy. Both countries have felt the economic impact of the trade war, although the specific effects have varied across sectors and industries. The upcoming trade talks in Geneva will provide an opportunity for the United States and China to address the issue of tariffs and their economic consequences. Finding a solution that reduces or eliminates tariffs will be crucial to de-escalating the trade war and restoring stability to the global economy. Section 5, the Federal Reserve's Balancing Act, Trade, Inflation, and Economic Growth. As the U.S. China trade talks unfold, the Federal Reserve faces the challenging task of navigating the uncertainties of the global economy while maintaining price stability and promoting economic growth. The Federal Reserve's monetary policy decisions, such as setting interest rates, have a significant impact on borrowing costs for businesses and consumers, influencing investment, spending, and overall economic activity. The trade war has introduced a new layer of complexity to the Federal Reserve's decision-making process. The Federal Reserve has acknowledged the trade war's risks, noting that it could dampen business investment, disrupt supply chains, and weigh on global economic growth. The central bank has indicated that it is closely monitoring the trade situation and its implications for the U.S. economy. The Federal Reserve's next move on interest rates is uncertain, with policymakers weighing a range of factors, including inflation, employment, and global economic conditions. Some economists argue that the trade war's uncertainties warrant a more cautious approach to interest rate policy, suggesting that the Federal Reserve should consider cutting rates to support economic growth. A rate cut could provide a boost to the economy by lowering borrowing costs, but it could also raise concerns about inflation. The Federal Reserve faces a delicate balancing act as it seeks to support the economy while navigating the uncertainties of the trade war.